Hi everyone, I am Karan and welcome to Karan's Gyan. The stock on focus for today is Yes Bank and Yes Bank SEBI probe. So as you know, Yes Bank share fell about 10% today when SEBI said that it would launch a probe on its post FPO announcement. I would explain this news completely to you. Now, I would get to key takeaways. Yes Bank share fell about 10% today as soon as it opened. So, we would look at Yes Bank. We see it has fallen about 12.55%, and we would go to today's chart. As soon as trading began at 9:15 a.m., we see Yes Bank fell 14% directly from 25.55 rupees to 22 rupees. Well, this came amidst SEBI's announcement of it launching a probe. I would explain what the probe is. So SEBI says that it would look into large amount of share transaction of the bank under the securities lending and borrowing mechanism. So what happens in securities lending and borrowing mechanism? It is basically a mechanism for short selling shares in cash market. So instead of doing intraday short selling, or instead of doing short selling on futures and options, you can do short selling on cash market using SLBM. So what happens in short selling is you are selling a share that you basically don't have. So you'll have to borrow the share from person who is a shareholder of that company. So you borrow that share, and since you borrow that share, you'll sell it in the market and you'll buy it later, and you'll return the share back to the person you took it from. However, that person won't simply give you the shares, he would ask you to pay an interest. So basically, this is what happens in SLBM. What happens in profitability on SLBM is the profitability goes to price borrowed minus price sold and minus interest. We'll get to this formula later, and I'll show you how would people benefit with the profitability of the scam they have put on Yes Bank. So we'll discuss about the shares traded. We know that Yes Bank's FPO announcement came on 10th of July, and we'll look at this SLBM data on NSE. This is data is taken from NSE. We can see about 4 crore shares were traded on SLBM, then 50 lakh shares, then 60 lakh shares, and then another crore. Now we can see the share price range. It would obviously have been sold between these ranges. So these are the high low ranges that I compiled from that day. Now what happens is, as I said, in an SLBM mechanism, in securities lending and borrowing mechanism, you have to pay a premium. So the premium on June 22 was 25 paisa. All right, and suddenly the premium rose to rupees 8 on a share that is 26 rupees to 28 rupees. The premium is 8 for them to just short sell for 1 month, and this came out to be highly suspicious because this premium is extremely high. So SEBI says there might be some insider information about FPO being launched in Yes Bank, and it wants to investigate that. So we look at the profitability that these people can have. Now the profitability is basically, like I said, priced at which the share was borrowed. Let us assume, based on this data, on the share price range on the day SLBM were based on the SLBM data, we can assume that it was borrowed at rupees 26 and the interest was rupees 7. Well, the interest is in the range between 0.25 to 8 rupees, but I will take it as 7. I want to look at the minimum profit. So interest paid for the share to be borrowed for 1 month period, where the settlement was August 6th. So remember, the settlement is August 6th, and the borrowing was at rupees 26. Interest paid to borrow the shares is rupees 7, and we know the ceiling of FPO is rupees 13. Hence, profit per share can be rupees 6. Now look at how smart these investors are. They borrowed shares so that they can be so that they can be shorted, and they know that FPO is in the range of rupees 12 to rupees 13, and even if they bid the highest amount of rupees 13, the shares would be credited post FPO on July 24th. they have to return the shares that they borrowed on August 6th along with 7 rupee premium, and they know the FPO is priced between 12 to 3, much lower than the share prices range at which they picked up and or borrowed the shares. And the shares will be credited by 24th July and they can basically return their shares. How smart these short sellers are and how smart these insiders are. Now we need to understand another thing. This rupees 7 interest is really high, no? So how do we determine why interest is high or why interest is low, and when it should be investigated if the interest is extremely high? So basically this interest is determined based on a pricing formula. The pricing formula is the price at which the share is borrowed into 1 month of bank interest. It's just like the cash that you're given, how much cash you can earn via risk free interest. So risk free rate of return is generally the fixed deposits rate of interest, because fixed deposit is considered risk free. No risk is considered on a deposit, but there are some risk, but comparatively there are no risks in a fixed deposit. Plus dividend. Now you borrowed the share. So for example, for the 1 month you have borrowed the share, you get a dividend. You have to obviously pay for that dividend also. However, Yes Bank is paying no dividend, hence dividend component is zero. Now I would assume 1 month bank interest to be 0.5% approx. Using this formula, this is an approximate formula. Ideally it should be 0.48%, but just so that we get a better understanding, it is 0.5% interest, risk-free interest would be generated in 1 month. Hence, the interest should be 0.13 rupees or 13 paisa. And in this case, the interest is rupees 7. Surprising. Let us just assume that Yes Bank has, less shares are available in the market because of the offloading restriction. We let us assume that there's a premium twice, 25 paisa, like they say, when it was 25 paisa on June 22. However, it is really surprising of the premium going from 25 paisa to 8 rupees. It is about 32 times. And this is extremely surprising for SEBI also. Just so that you know that during 2001, Ketan Parekh, everyone would have heard about Ketan Parekh and his K10 stocks. Traders used automatic lending and borrowing mechanism, so it is the predecessor of SLBM. And after finding out the loopholes in ALBM, the several restrictions were kept place on ALBM, and SLBM came into place. So Ketan also used a similar way to manipulate the market, and it is not surprising that SLBM again is being used to manipulate the market and trade on insider information. So this is a very bad news for Yes Bank and a very bad news for investors who have invested their hard-earned money in Yes Bank and are seeing it blow up by 10% in 1 day. So guys, this is it about Yes Bank, and I hope you like the video. Have a nice day.